You know, some of the preliminary reactions we've gotten here so far have been that it's a step in the right direction, but it's not a huge step. There's still a lot of work to be had. What's your feeling about this news?
I think, first of all, this is a right step in the right direction. We kind of feel finally, actually since late last year, beginning of this year, Chinese government has been sending out a signal that a further opening up of domestic financial markets to all players is the way to go. I think China is now maturing itself in the financial market. But, with the MSCI inclusion sometime next year, twice or in one go, up to 5%. But here you have 129 licensed securities firms doing, broker-dealer job. That's
right.
A little bit too fragmented. Out of that, there are only half dozen foreign managed or foreign owned kind of, we are one of those minority.
Right.
So I think we expect to be major step up by the foreign players.
Right, and Eugene, I know you're limited in what you can say specifically right now, since there's still early reactions to this about from UBS's point of view. But when you heard news like that, I mean, what might we expect out of UBS? What do you think might be some of the steps that you might take given this further opening up?
I think UBS, just like any other international leading firms, who is taking, a long-term view on China. We feel this is the right thing to do. We're going to look ways to increase our presence onshore, and our global leaders has announced that at the beginning of 2016. I think we're going to invest more and seeking a more presence in this market, which to us, China is one of the key markets for the whole group across investment banking, asset management, wealth management. So I think we were looking ways to step up, including looking ways to increase our equity stake in the securities joint venture we have here in China.
Okay, so increasing the stake. J.P. Morgan's Jamie Dimon, the CEO, has talked about the China market and some of the frustrations they've had, which is why they've left certain aspects of the Chinese market. But he was asked this question about being in China and what are his goals there. And this is what he said about foreign investment in China.
When foreign investors come in, investors can sometimes be a little bit of a pain. On the other hand, they demand transparency, they demand governance, they demand bankruptcy laws. So J.P. Morgan can play a part in helping set very high standards for governance.
So, Eugene, would you agree with that?
I think foreign firms come in, bring a lot of things, helping China improve the corporate governance is one of them. But I think as China market, as I said earlier, become more and more open to international investors, have some leading international, investment banking firms here presence in China, offering those kind of service alongside of the leading Chinese security firms will provide a diversity and provide a lot of the good practice from global markets to be introduced in China. I think Chinese authorities recognize that for a long time. Now I think they finally say now it's the time, let's open it up, right, to allow the foreign majority controlled security firm for the next 3 years, and then beyond that, I think anything up to 100% or wholly owned of a foreign-run security firm will be allowed in China. So I think foreign firms will continue to be involved. If anything, will step up and do more in China.
But this is coming at a time, Eugene, when China is perhaps reaching the end of its credit cycle. I mean, you take a look at the balance sheets of banks. They have blown out. The debt to GDP continues to blow up. MBL, that issue is still very much there. Is the timing right for UBS to be increasing its stake in the mainland? McKinsey just came out with a report saying one of 3 Chinese banks failed to create economic value.
Actually, we take a little bit of medium to long-term view on China. We think in the medium to long run, i.e., 3-5 years and out, I think China remain one of the most vibrant economy with the local wealth creation and with the capital markets further opening. For the short term, we actually see, as you alluded to, a lot of the work needs to be done, and precisely international firms such as us or J.P. Morgan and others could come in to help Chinese economy to restructure. Not that something we bring in something unique, but it's usually the international well-proven product that then adopted to Chinese local practice or local conditions. That way, I think we have a lot of room to perform here to contribute towards the Chinese economic restructuring.
Eugene, real quickly, what does this mean for cross-border capital flows? We've seen 2 years where China has really put a heavy hand when it comes to capital controls. Is getting out going to be as easy as getting in now?
I think both ways Chinese recognize this has to be more orderly, and as long as you said, a little bit of a temporary tighter control over the last 12 to 18 months seems to have worked, with the currency stabilizing, with the exchange rate stabilizing. I think that means there will be more orderly. I think, what we need to say is Chinese still looking for cross-border acquisitions, if not for the more, kind of what they call the non-contributing sector, such as buying up properties or buying up sports clubs. Now I think the, high-end manufacturing sector, TMT sector, and some of the consumer deals that we're working on, we still see the capital outflow, if anything, a little bit more orderly.